We are live from Bloomberg's world headquarters in Midtown Manhattan. I'm Matt Miller.
And from our studios in Washington, D.C., I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. Coming up, Bitcoin blows past the key $30,000 level for the first time since June of last year. That's giving a boost to crypto-linked stocks. We'll assess the rally with Marathon Digital CEO Fred Thiel.
And more governments and companies are learning to harness the power of the blockchain. We'll discuss the next stage of digital money with Denelle Dixon of the Stellar Development Foundation.
And Ethereum is a day away from an upgrade that could lure billions of dollars into its native token. But it may come with some risks. We'll have the details. So all of that is ahead, but first let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. And what you will find is, as I already said, we are north of 30K on Bitcoin. Right now trading at $30,150, up about 3.5% on the day. A breakout we have all perhaps long awaited, finally realized. We'll see if it sticks. You're actually seeing some outperformance, though, for some other tokens out there. BNB is rallying today, and Solana is actually up 13% on the day to just above 23. Of course, this is translating into some of those crypto-related equities. MicroStrategy, of course, which was a big buyer of Bitcoin, bought at an average of $29,803, is liking the rally we are seeing with that stock up about 7.25%. And then Marathon Digital, whose CEO we will be speaking with in just a moment after a double-digit gain, up 11% today on this Tuesday, Matt.
Yeah, and up like 180% year to date. They're doing incredibly well, so I'm looking forward to talking to Fred Thiel. One of the big drivers, of course, has been the price of Bitcoin. I'm looking at a chart that goes way back in crypto years, all the way to 2015, 2014. It's put into log, so it takes out the big peaks and valleys. But here in 2017, you can see when we hit almost 20,000. Here at the high in 2021, when we hit over 65,000. Right now at 30,116, we're climbing back into the long-term trend line. So what it looks like is we're just really getting back to where Bitcoin should go if you look at the time-honored log chart here. We caught up with Bit Digital CEO Sam Tabar on the reasons behind Bitcoin's latest rally.
The loss of Silvergate's exchange network and Signature's Signet has certainly reduced the liquidity as market makers use these banks for 24/7 settlement. However, there is also a logical reason why Bitcoin is going up. And it's because Satoshi's thesis about the financial system having too much control, he invented that in the last banking crisis. And here we are again. Another banking crisis, you'll see Bitcoin going up. Eventually, Bitcoin will be seen by a lot of people as digital gold. It's the ultimate way to hedge against macro bets, inflation, and this sort of thing that's happening today.
Joining us now is Fred Thiel. He's the CEO of crypto miner Marathon Digital. And Fred, you've had a spectacular year fueled by this rally. What do you think is behind the gains? I mean, trading must be incredibly thin. I looked at the market cap. It's about $580 billion, but almost $400 billion of Bitcoin has been dormant for years, meaning that only about $180 billion actually trades. Is the thin liquidity behind the steep rise that we've seen?
Oh, I think what's driving the steep rise is a flight to safety. If you look at the correlation of Bitcoin, it's traditionally in the past few years been very correlated to the NASDAQ and to the S&P. We're now seeing it decorrelate from the NASDAQ and S&P and correlate much more to gold. So I think what that plays to is more of a thesis of flight to safety. With the banking crisis, many people realize that this is really what Bitcoin was born to do. It was born to be an asset where you control the keys, you hold your money, and nobody else does. And I think that's why we saw this big jump from 21 to 28 right in the middle of that banking crisis.
Where do you think Bitcoin is held? When you look at the concentrations, is the trading happening mostly here? Is a lot of it happening in China? I mean, surely it's global, but there are pockets where traditionally it's been necessary to hedge against inflation, like Argentina and parts of Africa. Is it still there?
Yes, I think what you see, if you divide the data up into kind of three phases, Europe, North America, Asia, you lately have seen that the price of Bitcoin tends to rise mostly during Asian trading hours. And then it sustains that with European hours. And then when the U.S. North America comes online, you tend to see some selling. So I think a lot of the buying has been family office and institutional buying out of Asia, as well as Europe. I know we certainly get contacted quite often from buyers who want to try and buy directly from miners, which we don't sell to. But there's a lot of interest in acquiring Bitcoin. As you said, it's fairly thinly traded. I think right now the market volume is about half of what it was during the kind of rush time in 22. So about $10 billion a day versus typically $20 billion a day. But I think what you're seeing is really the offshore markets primarily buying. In the U.S., we have a lot of regulatory hurdles. We saw a major shift in Washington's attitude towards crypto come this spring. And I think you're seeing some people reposition themselves. Meanwhile, in Europe, they have put together very good regulation. Asia's developing very good regulation. Dubai has positioned itself very strongly for crypto markets. So I think you're seeing the international markets adopting a set of fair and good rules for digital assets, where in the U.S., they're just trying to kill it.
Well, but Marathon Digital is based here in the U.S., Fred. So what outcome on the regulatory front do you fear most? And will that cause you to change the way you do business, maybe do it elsewhere?
Well, we've already started doing it elsewhere. We announced earlier this year a joint venture with the Sovereign Wealth Fund of UAE for what'll be a 250 megawatt facility in Abu Dhabi. We're beginning to look extensively internationally. We think there's a lot of pressure on mining in the U.S. We have, at the same time, some states who have declared themselves states that are miner friendly. Arkansas, for example, their state legislature just voted on a right to mine bill, and the state of Montana also has a right to mine bill, and other states are trying to do that. But at the end of the day, the regulators in Washington, with what they've done with the banks and what we're starting to see noise about regarding energy and things like that, we believe that there's a concerted effort really against crypto in the U.S., and so we're further diversifying our efforts internationally.
Well, you brought up 2 points there, Fred. One, on the subject of what has happened with the U.S. banking system and crypto banks specifically over the course of the last month and change. The other being, joint ventures you're pursuing, the idea of an expansion in some sense, I gather. So how are you financing that expansion? Are you able to take out new loans, and from whom?
Well, at this point, we have no debt other than our convertible bond, which expires in 2026 and has a 1% coupon. So we paid off all our loans to all banks late last year and at the beginning of this year. So we sit on a lot of cash and a lot of Bitcoin. We don't sell all our Bitcoin. We hold our Bitcoin. I think today we have a little over 11,000 Bitcoin on our balance sheet. And as public companies go in the U.S., I think we're the second largest holder of Bitcoin. So we have ample capital to finance our growth. We've already paid for the majority of the growth we're seeing this year. We're growing from 7 exahash at the end of last year to 23 exahash this year. That's over a tripling in capacity. And that's already mostly been paid for. So at this point, any further expansion, we have ample capital on the balance sheet to fund that. And we're very excited about the opportunities to continue to grow. We have one of the most modern and most energy efficient fleets in the world. Our average energy consumption on a per terahash basis is somewhere around 24 joules per terahash, where the general industry today is somewhere in the mid 40s. So we feel very bullish going into the halving cycle, which will happen in May of next year, which will put a lot of pressure on other miners. If the price of Bitcoin doesn't move up substantially north of 40, closer to 50K by May of next year, there are going to be a lot of miners whose costs to mine a Bitcoin will essentially double. It'll take twice the effort. Meanwhile, the global hash rate has continued to grow. We're at record levels almost today. And it'll continue to grow through this year, making it even harder.
Does that give you an opportunity, Fred, to buy either competitors or their gear? Are you interested?
So, great question. The funny thing with Bitcoin mining is that when the market price goes down and people are in trouble, buying new stuff goes down too. So it's a build versus buy decision. And if people have infrastructure that is good infrastructure, meaning good data centers with good power pricing, those can be very attractive in a down market. whereas machines that may be 2 years old are not, because they're near the end of their economic life and their energy efficiency is not as attractive. Technology moves very quickly in this industry, and so it's very important to continually modernize your fleet. And I think what you're going to see now is the kind of growth of companies that have very modern fleets, Marathon, Clean Spark, others like that, whereas miners that have older fleets are now caught in this pickle of a situation where they can't borrow money, they can't tap the equity markets. So how are they going to refresh their fleets?
Fred, it's been great having you. Really appreciate you joining us. Fred Thiel of Marathon Digital talking to us about the problematic relationship of U.S. regulators to the crypto industry and what would happen in a downturn. Of course, we're far from that right now with Bitcoin over $30,000. We come back. Denelle Dixon, the CEO and executive director of Stellar Development Foundation, will talk to us about the other piece, how to advance the adoption of blockchain technology and what to do about regulators.
Plus, we'll talk about crypto's next big thing and dive into the long-awaited updates coming to the Ethereum blockchain and the complications that could result.
And to access all of the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
I'm actually pretty optimistic, and I would actually say that this is somewhat conservative view. If you look through the Citibank report and you look at the own projections that we've made, that would imply actually a slower rate of adoption of crypto than a lot of other, or really tokenized digital assets, than a lot of other things like cloud computing. So I think $5 trillion by 2030 is actually a fairly conservative calculation, but it's quite reasonable, and I'm quite positive on it. It gives us plenty of time to work through some of the regulatory challenges and the other technology enablers required to scale it up that massively.
That was EY's Paul Brody discussing global blockchain adoption with us last week. Joining us now to continue this conversation is Denelle Dixon. She is CEO and executive director of the Stellar Development Foundation, a nonprofit group that supports the growth of the Stellar blockchain network. She is here with me in our DC studio. So, Denelle, great to see you in person. Of course, we were having that conversation with Paul Brody. My follow-up question to his optimism was, okay, well, what stands in the way? One of his answers was regulation, and that was a subject we were just discussing with Fred Thiel of Marathon Digital. We're here in Washington. I'm assuming you're having conversations around this. How optimistic are you on the regulatory front here in the U.S.?
So I feel like we need to get something done here in the U.S. in order for us to really set the standard, if we want to set the standard, which I think the U.S. government is going to want to do that. So I'm very optimistic that we're going to get something on stablecoins by the end of the year. And the reason why is because we don't have a choice. If we want to have a voice in this, we need to get it done this year.
When you say the U.S. government, who are you referring to? Is this a congressional question? Is this the SEC CFTC question? Is it the Biden administration and directives coming from the White House? I mean, who realistically is in charge?
Well, we've actually already seen the Biden administration indicate, at least on stablecoins, that we need to see something happen there. So I feel like that's already been a directive from the White House and the administration. And then we do need to see in Congress, we need to see them take that and run with it and create something for us. So they're in charge of the legislation with respect to stablecoins, in my opinion. And we need to see it because once we see stablecoin legislation, we're going to see adoption of more by digital assets of more companies that are in the Web 2 space, which is essentially what I think we want. If we want a strong U.S. dollar and we want a strong U.S. dollar globally, a U.S. dollar stablecoin is a way to see that happen.
You are, Denelle, at Stellar behind the development and growth of this technology in this industry. Does it have to be in the U.S.? Or why are you so U.S.-centric, seeing as other countries are so much friendlier to the crypto industry than the U.S. seems to be?
Well, I love the fact that other countries have actually taken a lead on this, but I don't want us in the U.S. to be forgotten because I think it's a really important place where we have a lot of innovators and a lot of developers who are already really focused on this tech stack, and we want to see them be able to get their technology out and make it more utility-focused and usable. So I just don't want us to stay so far behind in the U.S. that we lose sight of what the value is, which is actually really getting these technologies to the U.S. consumers as well. And to be honest, if we don't do something in the U.S., we're going to be in this bifurcated world where we have legislation outside the U.S. that's more friendly to crypto. We're going to have companies being outside the U.S., and we're still going to have the issue where U.S. consumers are going to want to leverage this technology. So what are we going to do in that scenario? So I'm optimistic only because I don't think we have a choice.
How do we get, or how do you get then some of the political capital back that was destroyed by Sam Bankman-Fried, that seems to have been spent by CZ? I mean, this industry, they're not, favorites on Capitol Hill.
Well, part of it is that we don't have a lot of operators that come to Capitol Hill, and so we need to do that. We actually have some really great utility uses that were shown already the value to consumers and to businesses alike globally. We see some of those on Stellar. We have the humanitarian aid use case that we did with the UNHCR, where the UNHCR is using Stellar and tools built on the blockchain and USDC to be able to get aid into Ukraine to users in 2.5 minutes. That's an awesome use. We also have folks that are using this for cross-border. We see a lot of it happening where in Colombia, they're preferring the USDC, the dollar in Colombia, and they're leveraging that to count against inflation there. So these are things that we're seeing happen. And what we need to do is have operators come to DC and be able to tell their story of what they're developing. Stop talking about the technology, start demonstrating the utility. This is what we've been doing for a long time, but honestly, it hasn't been that sexy when all the trading use cases and all that were going on. But now let's focus on the real utility. That's how we win this.
Okay, so if it's about utility, though, doesn't that require understanding? Because the argument we get from skeptics and some lawmakers as well is it's not necessary. You're just reinventing the wheel, maybe doing something in a different way, but we don't actually need it.
Well, first of all, I think it's because a lot of them focus on the tech stack and they're not actually looking at the uses. When you look at a wallet that's actually enabling you to live in Colombia, to receive USDC, and to hedge against the inflation in the local currency, that demonstrates that there is value there to someone, and that is actually happening because it's a digital asset on a blockchain. So we have to talk about the utility in order to make that happen. But importantly, we don't actually see a lot of discussion around that. So we see more discussion on the tech stack. And the truth of the matter is, you use HTTPS every day when you go and log onto your computer, when you're checking your bank, when you do all those things. You don't actually talk about HTTPS.
Right, I don't even know what
I think
exactly. That's the point. The point is we have to stop talking about blockchain and crypto and show what it can do.
So I am a buyer of the utility, and I think most people who educate themselves on it are. Why does the price have to move? I mean, for example, if I believe in the Ethereum blockchain, do I really need to buy multiple Ethereum tokens?
Well, in my opinion, I think that that's actually just an investment use case that people are focused on. That's up to them. That's your individual decision about whether to do that. I think the answer is no. I think the fact is the utility actually has to demonstrate value outside of the investment use case.
All right, I just Googled what HTTPS stands for. For those that don't know, like myself, Hypertext Transfer Protocol Secure. So learned something new today. Denelle, thank you so much for joining us. Great to see you here in Washington. That was Denelle Dixon of the Stellar Development Foundation. And for other great conversations like this one, make sure to check out our Bloomberg Crypto podcast, which dives deeper than the daily market buzz to explore the stories and people shaping the ever-evolving digital landscape. Look for that every weekday, wherever you get your podcasts. This is Bloomberg.
This is Bloomberg Crypto. I'm Matt Miller in New York with Kaylee Lyons in Washington. Let's get to some of the crypto stories that caught our attention this week. Coinbase's senior director of product management is leaving the company. Bloomberg has learned that Vishal Gupta is going to be working on a new project in the crypto space after nearly 3 years at Coinbase. Before Coinbase, Gupta helped launch Circle's flagship stablecoin.
And the Winklevoss twins are dipping into their own pockets to support their crypto exchange. Bloomberg has learned the billionaires made a $100 million loan to the company after initially trying to raise external funds. Gemini has faced numerous setbacks during a year-long market downturn for digital assets.
And the Ethereum blockchain is set for a major software update on Wednesday that will allow users to withdraw tens of billions of dollars of its native token, Ether. The overhaul, known as the Shanghai upgrade, comes after last year's merge, in which the crypto platform shifted to a less power-hungry process for ordering transactions. For more on this technical move, we're joined by Bloomberg Crypto reporter Olga Karif. And Olga, we just got done talking about how we don't really need to know what HTTPS stands for, but we do kind of want to know why the Shanghai upgrade is a big deal. What is it going to do?
Sure. So basically what the previous upgrade did in September is it moved Ethereum from using very power-hungry computers to order transactions to using essentially staked coins, essentially wallets holding Ether. And so what Shanghai is going to do now is allow people to actually take those staked Ether out of the wallets. So until now, for the last 2.5 years or so, people have been able to put their Ether to use, essentially helping Ethereum network work, but they haven't been able to take them out, and now they will be able to start, hopefully starting tomorrow.
Okay, so all of that sounds great in theory, but what are the risks? Could any issues arise as a result of this?
Sure. So Ethereum developers are sort of very well known for making upgrades run pretty smoothly. We've seen some recent tests have very few issues, except for maybe not as many participants on the network upgraded their software. But besides that, we have not seen any problems. The issues that could arise now could be related less to the upgrade than to some of the participants maybe having misplaced their keys that are needed to unlock the Ether, those kind of issues, or people getting hacked, because until now, these issues would not have come to light because withdrawals weren't allowed to happen at all. So, but now all of the skeletons in the closet might sort of make their appearance.
All right, Olga, thanks so much for joining us on the Shanghai upgrade. Bloomberg's Olga Karif talking us through what it means, and we'll see, obviously, if it has any fallout in terms of price action, Kaylee. But it has been an absolute boom watching Bitcoin go from, what was it, 16,000 pre-FTX collapse to now more than 30,000. So almost doubling since the middle of November.
Yeah, we'll see if it sticks. And of course, we'll update you on the price action and the outcome of that Shanghai upgrade next week on Bloomberg Crypto. Rebecca Reidig, she is Chief Policy Officer at Polygon Labs, will be joining us. This is Bloomberg.